Nothing looks from the outside like it is from the inside, and nothing changes a culture more than success.
100 years ago, the paradigm was build big, huge plants, potable quality water at the lowest possible price for the most amount of people. And maybe that worked 100 years ago.
Decentralized water and wastewater treatment systems, built, owned, operated, or as we call them, water as a service project. The entire culture of the team changes. There will always be opposition and people questioning your decisions. Ultimately, there's only one butt to kick, and you have to be willing to define leadership as the one responsible for the bad and for the good. Water as a service is the only and the best way for the decentralized market to go.
Welcome to this episode of the Salty Water Podcast. Today, I want to highlight a big success story in the water business and talk to the man behind that success. The story involves both desalination and wastewater treatment technologies, as well as commercial and project delivery innovations. Today, we're going to talk with the CEO of Seven Seas Water, Henry Charrabé. Seven Seas Water has an interesting history. Founded about 30 years ago by Robert Bergstrom as a single plant desalination company in the U.S. Virgin Islands, it subsequently expanded in the Caribbean market. In 2007, the company merged with Aqua Ventures, led by Doug Brown, formerly the CEO of Ionics. In 2016, Aqua Ventures went public, and in 2018 acquired Houston-based AUC, a provider of packaged wastewater treatment plants. By 2020, Aqua Ventures had a portfolio of approximately 150 plants when Morgan Stanley Infrastructure Fund acquired the company as a private entity for approximately $500 million. In 2021, our guest was named CEO of Seven Seas Water, and he has done a marvelous job growing the company with both technical excellence and commercial innovations, which we'll discuss in a moment. That success was recognized in May 2025 when the Swedish private equity group EQT acquired Seven Seas from Morgan Stanley for something over $1 billion, over double the value in less than 4 years. Henry is a proven leader and experienced water sector executive manager. Prior to Seven Seas, Henry led both public and private companies with leadership positions at Fluence, as well as RWL Water, a company affiliated with Ronald Lauder. Henry has a BA from Free University in Berlin, Germany, and master's degrees from Brandeis University and the Kennedy School of Government at Harvard University. Welcome, Henry, to the Salty Water Podcast, and thank you for taking the time to talk with me today.
Thanks, Eric. Thank you for having me.
As I mentioned, you've really made amazing progress since taking the helm at Seven Seas just over 4 years ago. You've won new projects in the Caribbean, Central America, and in the U.S. You've grown the company and now have something over 220 projects under management, and have orchestrated this recent transaction, which more than doubled the value of the company. I think our audience would like to understand how you approached this position and what factors that you implemented that produced these great results.
Well, thank you. So it started out by the fact that I was a big admirer of Seven Seas. I knew Seven Seas, I knew Doug Brown from my years before, and obviously Doug Brown was a pioneer in bringing Seven Seas public as Aqua Ventures. Doug and I were discussing in the past similar experiences by running publicly traded water treatment companies. And then when I had left Fluence in November 2020, I was approached, as you pointed out, by Morgan Stanley. And it so happened that my idea of what should we do in the United States and elsewhere, which is focus on decentralized water and wastewater treatment systems that would work best if built, owned, operated, or as we call them, water as a service projects, really fit with the Morgan Stanley model. And so the prior 2 decades of experience in the water industry, both domestically and internationally, helped me at least focus the strategy and then bring on what I think is a phenomenal team to help execute that strategy. So we came in, as you pointed out, myself in September 21, and then out of the 9 leadership team members, 8 were new that we put together, and we brought this company to really focus on the water as a service approach, both in the United States and in the Caribbean and Latin America.
Can you describe coming into an organization, even though you knew of it and you knew Doug, what kind of challenges did you face in corporate culture, in refocusing on the goals, and what kind of management challenges did you face when you first stepped into the job?
I think the challenges were significant. I think nothing looks from the outside like it is from the inside. When you look under the kimono, it's very, very different. And so What the team had done in the past, and I think over the last years, Aqua Ventures focused a lot on inorganic growth, especially on the Quench side, where they acquired a lot of businesses that was ultimately sold to Culligan during the transaction when Seven Seas was sold to Morgan Stanley Infrastructure Partners, as you pointed
Right.
out. And so there was a lot of the business development that was nascent, I would say. So we had to really reestablish a pipeline, focus on what we believed was the strongest sales model for Seven Seas, which was the water as a service approach, and AUC doubling down on a model that would allow us to not only grow in the greater Houston area, but expand it throughout Texas and outside of Texas. And so we were blessed with having a couple of years where we put that plan together. And then to your point, also then, of course, could deliver that success by winning projects both in the US and elsewhere to really change the culture. And nothing changes a culture more than success. There was, of course, a lot of doubt at the beginning. And there was a lot of doubt, especially with the new owners, with Morgan Stanley. I was lucky enough to create relationships where I hope that the team ultimately believed in the management. And again, if they believed in the management or not, once you win and bring those projects on board, the entire culture of the team changes, and there's a lot more that you can do. Despite the fact that there will always be opposition and people questioning your decisions, ultimately, there's only one butt to kick, and you have to be willing to define leadership as the one responsible for the bad, and for the good, it's obviously the benefit of the entire team.
Yeah. It's interesting. You mentioned some skepticism in Morgan Stanley. How would you say it is being responsible to a private equity kind of ownership structure versus, a publicly traded stock where you're listed and have shareholders and quarterly results? How does that change your management focus and your ability to garner support from stakeholders?
That's a good question. So I cannot point out to what it was like to work at Seven Seas before Morgan Stanley. From my experience being public before with Fluence, you obviously have many more stakeholders. And you also tend to sometimes have a conflict of interest of public stakeholders that are board members that have certain interests versus the broader public or even institutional investors. When you come to a private entity like Morgan Stanley, you really only have to cater to one stakeholder, which in this case was a private equity or infrastructure bank. And in our case, we had 3 board members who I got to know very well over the last 4 years and understand what their goals were, what their organization's goals were. And they gave us, of course, not quarterly targets, but everything was dependent upon the exit. When I first interviewed with them, I asked them, what does the exit look like? Do you want to go public? Do you want to sell to another private equity? Do you want to hold this company for 15 years, which is different than for 5 years? And I think having a clear understanding of what the exit ought to look like gives you then the ability to structure your strategy accordingly. So having a private equity owner with a clear exit strategy, with a clear understanding that it's an infrastructure business that cannot change on a quarterly basis, but focus on the long-term, recurring, steady business, was really the game-changing difference between being public and being owned by a private equity.
That's interesting. I want to talk with you a little bit more about water as a service, which is the branded sort of marketing focus of Seven Seas. And I know that historically in the wastewater side, they offered leases, quote, lease packages. And how do you see water as a service differentiating from traditional BOO? And how do you use that? How do your clients sort of relate to that concept that's obviously working for you?
I think water as a service is the only and the best way for the decentralized market to go. When our interests align with our customers, then it makes 1 + 1 equal 4. When we put together a plan, we build, own, operate, maintain, and finance it to the best abilities for 10, 15, 30 years, whatever that case may be, rather than the typical water in the water wastewater space EPC model, the engineering, procurement, construct model, where you build a plan and then after the typical warranty period, you walk away. Then you build a plan very differently than if you're responsible for the maintenance and the operation over 30 years. So we only get paid if and when we produce water to the specifications of what was contractually agreed upon. On the wastewater side, it is not dissimilar. Although we do not necessarily operate wastewater treatment plants for AUC, we more and more offer now water as a service agreements also in Texas. And you are correct. In the past, those had been leases. But I still believe that rather than using a customer's cash or CapEx up front for a non-core asset, which water, wastewater very often is a non-core asset, makes little sense. And for us to really are being aligned with our customer, in other words, having a long-term offtake agreement where you reduce the monthly burden on the customer and you have a longer relationship, really benefits both parties. And that's really what I believe is the way to go. Now, there are, of course, exceptions when you build very, very large plants that we're not involved with. That might be better if you have separate public financing, or you build very, very small plants that would just make a lot of sense for customers to buy outright. I think the vast majority in our space really benefit from this water as a service approach because, again, interests are aligned and capital is expanded by the public entity, by the private entity, excuse me, in this case, us. And the public entity benefits from having reliable water, wastewater treatment.
What is your sweet spot in terms of size, both on the desal and the wastewater side? What do you consider your prime market for size?
I think from a CapEx point of view, prime market is probably $5 to $50 million in CapEx. As you know, that very much depends on what the intake and outfalls are for a desalination plant and the sizes. And on the wastewater side, of course, as well, we can go below and we can certainly go above. But I think that is the typical sweet spot. And that is both for municipal as well as for industrial clients alike.
You've talked a bit about the distributed, decentralized water model, and I know this is something that you believed in for a long time. You want to talk a little bit about why you see that as the future and how effective, and why it's more effective than, say, the traditional, build a big plant, run big pipelines, whether it's on the water or the wastewater side. Talk a little bit about your belief in this decentralized model.
Yeah, I strongly believe in it. The reason is when you build a large water wastewater treatment plant, then you plan it for the future. So by definition, it's redundant if you want to make sure it's there for a long time because you expect future growth. At the same time, you build a lot of infrastructure underneath the ground, which then costs a lot of energy to pump water, wastewater through an entire grid, which is not necessary. And on top of it, it also has a safety redundancy. If you have decentralized plants, if something happens, you have a redundant plant that can help out. In other words, small decentralized plants, in order to overcome especially the infrastructure problem we have in the United States, where we have about $1.8, $1.9 trillion of backlog for water, wastewater, is not absorbed by building very large plants. It would take a long time, are very difficult to permit, and then ultimately are being bid between 2 or 3 large players. Having multiple smaller decentralized plants, where it's more point of use, less energy consumption, lower CapEx, as well as the ability to then modularly expand as population grows, really seems to make a lot of sense. And that's what happens in power grids and in other infrastructure businesses. And in the water business, it's a little bit behind, but I think that's exactly what we do and what others have come to do as well. And I happen to believe it's the way to go if you really want what we have in the US and elsewhere, smaller suburban areas that grow, not just large urban areas or very rural areas, but suburban areas that grow. They really benefit from this decentralized approach rather than being dependent upon a large infrastructure plant somewhere in the next largest city close by.
Yeah, I think you're so right. I think 100 years ago, the engineering paradigm was build big, huge plants, provide as much, potable quality water at the lowest possible price for the most amount of people that you could. And maybe that worked 100 years ago, but it's not working today.
No, it is not. And it's again, we ought to always change not only the technology that we deliver. And as you know, wastewater, when we do activated sludge or even seawater desalination, reverse osmosis, these are not new technologies. But what we can do and should do and continue to innovate is delivery model. In this case, water as a service, decentralized, again, different than what we've done 100 years ago, because water and wastewater treatment is ultimately physics, biology, chemical treatment at one point. But the way we deliver the projects, the way we innovate and how we deliver it and how we give it to the people who need it the most, I think is the real game changer.
Yeah. I think you're positioned in the right place. One other area that I think is interesting is that you're obviously very active in the Caribbean and now sort of Central America markets. You're also very active in Texas. These are very different types of jurisdictions with different issues of political risk and rule of law. How do you feel, and what are the challenges for the company in kind of having these two disparate sort of markets that you've got both, 1 foot planted in one and 1 foot planted in the other?
I think ultimately It all boils down to what we offer. Whether you're a farmer in Texas or a tourist in the Caribbean or industrial customer in Peru, you depend upon water and wastewater. These are typically perceived as maybe higher risk jurisdictions. We do not have a problem collecting because we deliver the most important good. And so that's really what we pride ourselves in. I've had, to your point, many investor meetings over the last 2.5 decades. And when I think about people having to explain why they have a new technology or the newest app, I never had to explain why anybody needs water. The offtake has always been there, whether you're a customer in Texas or in the Caribbean or elsewhere. We are, of course, culturally sensitive and we understand the importance of what we deliver. But ultimately, customers are not different when it comes to the dependence and the reliance upon what it is that we are offering, which is water and wastewater. And so that is how our contracts are structured. We have a water as a service model that we propose, and we take on the same risks and the same focus, and of course, the same risk mitigants in all jurisdictions in order to provide that good reliably. And I'm happy to say that we've provided 100% of our contracted water 100% of the time.
That's terrific. Talking a little bit about the Texas market, I'm sure you've followed, they've made some big changes and made a constitutional amendment dedicating a lot of money to water resources and desalination. So you're well positioned there, but what do you see as the opportunities specifically in Texas? And what are your thoughts about what they've done and how they've done it in terms of making, institutional changes at the state level to address the long-term water supply needs of Texas?
So I think the biggest advantage of that is that people in Texas and elsewhere become aware of how important water, wastewater is and put it on the map. Unfortunately, the amount of money that they're spending, and this is no pun intended, is a drop in the bucket. It is already allocated to huge water districts, whether it's the city of Houston or elsewhere, that have long-term, as I mentioned earlier, backlog of infrastructure needs that those allocated funds need probably to be allocated to those projects. What this means for us is that we can really double down on the decentralized approach all over Texas. It's one of the fastest, if not the fastest growing state in the country. It has enormous industrial, commercial expansion opportunities, as well as influx of new citizens. And all those people need water, wastewater treatment, whether it is the unique MUDs, the municipal utility districts that are created in Texas, or it is industrial clients that come and build large industrial plants that then need, of course, also water for the surrounding areas. That is really where Seven Seas plays, I think, very, very well. And I think we have great opportunities in areas in Texas to promote water as a service, reducing the tax burden or upfront capital investment that maybe those state funds can deliver, and really offering reliable services to smaller, mid-sized municipalities, and then get reliable water as they need it and as we would be contractually obligated to deliver.
So you think there's more that Texas could do, but essentially they're moving in the right direction. So
Absolutely. I think there's always more we can do. I've been in the space, and I know you have as well, for almost 3 decades now. Never, ever has a customer come and said, we need less water. Every customer always needs more water, and we have more challenges. We have, more restrictive droughts. We have more devastating floods. That means that we will have significant business going forward, again, as long as we have an innovative model of how to deliver our solutions.
Yeah. You've done a great job in the 4 years you've been there. You've restructured the company now with this new private equity. What are your goals and aspirations for the coming years? What do you see as the future? And do you have any insight on the technology side of any progress in terms of either desalination or wastewater treatment?
So our plans are very ambitious. New owners, as you mentioned, EQT, they're one of the largest infrastructure funds in the world. They really saw Seven Seas as a great platform from which to grow, to bring the water as a service model, not only to where we are, but also, for example, to the industrial field. I think when it comes to technology innovations, there's a lot of push, obviously, to reduce the energy that is being consumed in water and wastewater treatment. I think that could be a game changer. We have to see what happens with the regulatory environment in the United States and how, under the current administration, the EPA reacts and acts according to what the regulations are. But EQT really acquired Seven Seas because they believe in the vast expansion of our water as a service approach, both on the water and wastewater side with municipalities, but also we want to enter into the industrial water and wastewater as a service side where I think there's a lot of opportunity to have industrial customers focus on the core and their CapEx expansion and expenditure, and for companies like Seven Seas to offer a water and wastewater water service solution to their challenge.
Great. We're coming to the end of our time. I want to commend you, take my hat off. You've done a great job in a short period of time. And I want to thank you for spending some time with me today and telling the story of Seven Seas Water, and wish you all the best as you go forward.
I really thank you. Thanks for the opportunity. Thanks for the kind words, and I look forward to our next conversation.